All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Tuesday, March 21st, 2023, excuse me. Wow, 2023. Sorry about that. It is 9 a.m. Eastern Standard Time, ready to go for the Morning Note. We got some stuff to cover. We're going to change it up a little bit today. Let me go around the horn. But I know a lot of people have a lot of questions about the Fed and what's happening. So I'm going to kind of pivot that today. Our back office is going to do a poll on Instagram when I'm going to do a live, so I can answer some questions regarding the Fed and how all this stuff works in banking. I used to be in banking, as you know, at Citi back from the time of 2006 to around 2011. So about 6 years. Well, 2012 is when I left, but about 6 years of banking. Now, again, banking regulations obviously have changed since then, so I can't really tell you all the details. Things may have changed, but I can give you some generalities overview of how banks and FDIC works and all that stuff. So we'll do that on the live. Let's go around the horn quickly. Dow futures up 304 points. Nasdaq 12,762 up 0.59%. I'm watching the 12,800 level. If that does break, keep an eye on Nasdaq to go even higher. So again, if we're looking at NQ, let's look at Qs. Let me go ahead and expand this so you guys can see. If we get to around 311 or so, again, we already broke out of this level here. So again, what we're looking for is a break of around 311. You could say 310. 310, I guess, will open up my eyes if that's the case. Let's put an alert at 310. Again, doesn't mean as a limit order, just to see. And if that breaks, then we're looking for the 161.8 extension, which is 323 on QQQ. So I just wanted to say that rather quickly. S&P 500 futures, we went long at 39.65. We went long last week as well at 39.50. We caught both trades. Well done, ES team, futures team. The TP was 4,000. We took it at what, 39.95. That was the case. But if people held on, they got an extra couple of points. Well done on that one. We'll keep an eye and see if we get any kind of pullback. Maybe we can rebuy into NASDAQ futures. S&P futures and go from there. Russell 2000 futures up 1.69%. Crude oil is up 1.64, 68.93 a barrel. 255 for gasoline, 0.59%. Gold futures 1966 down 0.84%. Silver down about 0.09%. Copper is up above $4, 1.43%. The 10-year treasury yields are coming back up, 3.579%. Dollar index is falling below the 50-day, 103.05. The VIX getting hit this morning, minus 6.34%, now at 22. Keep an eye on the 20 level. If that 20 level starts coming in, we'll probably get to around 40.50 on S&P. That's ES futures. 40.50 is a big resistance level. That is near the March highs. So again, that's probably going to be the next target. I have an alert at 40.20 for that break. If it does, then we're going to continue higher to 40.50. Mind you, tomorrow is the Fed, so we'll go over that here in a second. Euro dollar up 56 pips, 107.79. 132.25 for the dollar yen. Pound dollar 122.47. Bitcoin 28,325 at 395, up 18.29 for Ethereum futures, up 3.68%. So that's where we are. Let's go over a question here on Apple 163. In regards to Apple, I have the 160s. This was a freebie on Instagram. We got that break. We are green. So again, really our target is right here at 160. We're at a 157.15 ask at the current moment. NASDAQ is green, but Apple is flat for the day for the most part. So again, let's see if we get a little more of a push. Again, if the NASDAQ futures does break 12.8, then more than likely Apple will be at 160. So that's what I got currently. Those are for this week's expiry. Team is green on it. So let's see what we get. What do you think will happen to stocks if the Fed stops rate hikes? If the Fed stops rate hikes, you may get a little bit of volatility right when the announcement comes in. You may get a quick flush, you get a quick sword drop, and then it'll just retrace right as he's talking, which it usually does. So again, my main thing is to just watch and see what happens, not really try to add more risk ahead of the event, even though I think we're going to go higher. And the reason we're going to go higher is I'm going to segue to this. Because we're pretty much going to print, and every time that we expand the money supply, the S&P 500 goes higher with it. Very simple. More chips in the casino, more bets, right? It's kind of simple. So we posted a video yesterday of Powell speaking about how they create money. And the reason I posted that is to change your perspective on money. At the end of the day, guys, they just print it. It's just been that way. I don't know why this is surprising, but it's something that I guess is not taught in schools. But it's a little more delicate than just printing money. You have to buy bonds. That's kind of how it works. Government IOUs in order to make specialized little pieces of paper that says Federal Reserve note, and then that becomes money. So the national debt, in a sense, is really not debt. It's just money that's moving. That's literally the money supply, because money is debt and debt is money. If you paid every single debt, if every American paid every single credit card, car loan, student loan, everything, all debts, even the country paid off its entire debt, there would not be any money in circulation. This is based on the fractional reserve system. The fractional reserve system. So every time you make a deposit at a bank, the bank by law has to reserve 10% of that deposit, right? 10% of that, and 90% of that, or 90% of that deposit becomes more loans. The only way we can increase the money supply, guys, is debt, is more loans. That's it. That's the fractional reserve system. You can look it up through the Federal Reserve's website. The fractional reserve system, that's how it works. So again, the more debt we have, the more money we have. And the more money we have, the more debt we have. It's just been that way. And usually, obviously, when the printers turn on, 2008, 2020, what happens? You get a continuation higher. So again, don't be surprised. You start getting to 4,400, 4,500. Doesn't mean it's investable yet. I mean, you're just not sure. You're not there yet. So again, we're going to wait and see. We're going to see what exactly the Fed says, because now everything is changing. Now we're going to cover unlimited deposits based on a study. And remember, guys, when you make a deposit at a bank, you're literally investing in that bank in a sense as a depositor. You're trusting them with your money that you can have access to it at any time. A money on demand, basically. And if they don't have that money available, that causes a bank run. So I've seen a lot of people comparing this time to 2008, and that's not exactly accurate. 2008, you had a counterparty confidence problem, bank confidence between other banks. So, for example, AIG wrote a lot of credit default swaps, didn't have the money to cover because they used that money from writing all those contracts and closing deals on bonuses for everybody. Until those insurance contracts actually hit, they didn't think that we'd have a mortgage crisis. This is what happens. They got bailed out, they're still in business, and Goldman and all these other banks got 100 cents on the dollar for all those derivative contracts, not even negotiated, just transferred. It literally went transfer from the US Treasury or the Federal Reserve to AIG to bail them out, from AIG to Goldman Sachs and the other banks to pay out those insurance contracts. That's it. That's exactly what happened in 08. Now, where we are now is a crisis of confidence between people, depositors, and the banks. So again, if you are worried about your bank staying solvent, you're more than likely not going to have more than $250,000 in there, which is the FDIC limits. But if you are, middle class and you have around, let's say, $1,000 in there, FDIC does cover it at the end of the day. So, the majority of people, I guess middle class people, they're not really worried about that $250,000 limit. The problem is small businesses that have money in those banks. They need to make payroll. They need to pay their bills. They need to go ahead and pay taxes, quarterlies, and all those things. So again, that's important, obviously. So if they expand that deposit guarantee, where is this money going to come from? Printer. And that's it. It's just more bonds and more borrowing, and more spending and more printing. And the United States can do that. It's not like they can't. They have been doing it. So the people who say that money is worthless, hey, if you think the dollar is worthless, I highly suggest you donate it to people who are less fortunate. Give it to people who need it, because people that are hungry, people that are homeless, people that are poor, trust me, they can use that fake money or not real money that people may think that it is. Obviously, money is real to people, is real to somebody, because you can buy goods or services with it. It's just now we're going to have more supply. Again, think of it as a casino, where the casino is just adding more chips to the table. And if you add more chips to the table, what happens? More bets. And more bets equal, statistically speaking, more bad bets. And more bad bets equals more bailing out, more hurts, more issues in the system. But in terms of the banking system, in my opinion, from what I've seen, is not exactly in crisis. The crisis of confidence in the banks is completely different. That's all perception. That's very closely rooted to 1929. That's when the FDIC was actually created in the New Deal in the 1930s with FDR, as where we had the Great Depression, bank runs, none of that stuff was insured. So now, you had to create a program in order to create a safety net, a backstop. And that's really when everything started being created, was the Depression. Social Security was created during the Depression. FDIC was created during the Depression. The SEC was strengthened during the Depression, or the SEC was created during the Great Depression. So all of those regulations were created to prevent a 1929 type collapse, which was the Great Depression. But the Great Depression was longer than just 1929, mind you, even with all those regulations. But it stabilized eventually after World War II, because war is a great thing for the economy, apparently. But that's really it, guys, in terms of banking and the Fed. I will reiterate that on the live for you guys. But again, I really just wanted to let you guys know that, yes, money is real. Money can be printed. It's been printed. But again, just change your paradigm. Think of this, guys. In order to excel in anything, whether it's baseball, video games, school, whatever, you have to know the rules. You got to learn how it works, right? You can't go play basketball and you don't know the rules. Double dribble, traveling, got to dribble with one hand, air balls, three-point line, fouls. You got to know what the hell the rules are before you can play. Learn about how money works. That's learning the rules. And once you master the rules, then you can master the game. By being here on YouTube, you're slowly learning how to master the game. You're learning the rules. I'm not saying it's right. I'm not saying it's wrong. I'm just telling you the truth, what it is. The Fed will always print money when needed. That's it. They'll just print more because money is debt and debt is money. Every dollar you have in your wallet, you owe to somebody. Someone is owed by someone that money. Very simply. So just try not to complicate things too much when people throw jargon at you, quantitative easing, quantitative tightening, all this. It's the same thing. It's just changing the name. And that's really it. So I hope this changes your perspective on money and the thought process of scarcity. We actually live in an abundant society. Again, abundance is the key. We have more than enough food to feed everybody. We have more than enough land to house every single man, woman, and child in this country. We have more than enough money to take care of everybody if we wanted to. I mean, we just print it, right? Now, the other side is inflation. Inflation is the problem. The more you print, the more inflation you get. Well, inflation's going down. Will this affect inflation? Now we'll see the CPI as we go forward. But it seems now that the Fed really is focused on systemic issues, unless they raise tomorrow, which I expect 25 basis points. We'll get there when we get there. Can we chart Tesla to see what levels to add in the long term? No problem. Tesla for long term. Above 225, I would say. You have a gap to fill at 261. This is the support here in May that we bounced from and then finally broke down in October. I think 225 would be a great level on Tesla. But wouldn't inflation skyrocket and hurt stocks if the Feds start to print? That's the idea. But again, as we already have tightening financial conditions, as the banks are getting spooked with deposits, guess what happens to their lending standards? Gets tightened. So again, less liquidity, tightening financial conditions. The Fed is already planning for that, because if I don't think Signature Bank is going to offer any credit cards anytime soon. Am I right? I don't think First National Bank is going to offer much loans anytime soon. Again, so as they tighten their lending standards, other banks will tighten in order to restrict the liquidity of the market as they're going through things. But if the Fed says, hey, we're going to backstop you, we'll cover anything that you got, we'll help you out with some extra cash, it keeps the music going and keeps liquidity flowing. Now again, in terms of inflation, we've seen commodity prices fall like a rock. Really, the Fed wanted to do, in my opinion, was to just wait it out. I think they wanted to do rate hikes to get you to July or June, because that's when the peak happened. And again, year-over-year CPI would roll over based on taking the highest number out of the statistic, out of the equation. Then it gets lower CPI year-over-year based on the fact that June and July was the highest mark. You take that away on a year-over-year basis, you probably get to around 4% or 3%, 3.5% or so. And if that's the case, then the Fed is going to feel like, hey, inflation's under control, forget 2%, we need to protect the system. And that's where they are currently. So again, we'll see what they say tomorrow. Fed Chair Powell, it's going to be a very interesting one. Every single one is important now. Everyone said this is the most important. No, it's always important. So let's see what happens. Good morning, Carlos. Do you see a bear flag daily chart on ES? Let's see it. In terms of ES, I see what you're saying. You have that bear flag and come back down. But again, if you break above 40.58, 40.50, which is my target, at least short term, that's going to be invalidated. So again, depends. In terms of the daily, we're right near the 50-day moving average, which is right around 40.26. We're above the 20. Remember, above the 20, what does that mean? That's momentum to the upside. So I expect a little more upside to ES. If Fed Chair Powell speaks about expanding that balance sheet tomorrow, you're going to skyrocket to 4,100. That's what's going to happen. And a lot of people are bearish. How high was those put to call ratios? How high was everybody set on being puts and being bearish in the market? Rug pull. Goes both ways. When everyone's euphoric, you start pulling that rug, and then we fall, and everyone's in calls. Or if you're to the point that you're ultra bearish, the world's going to end, they can't print forever, and it's very simple. The Fed can be irrational longer than you can be solvent. That's it. That's really it. The Fed will just print you to death until you want to give up on your shorts. And that's what it seems like now. I think we're actually setting up for a huge boost to 4,200 as we get into the seasonally strong April. We've talked about March and April, how seasonally strong they are. And again, if you expand the money supply, more money becomes available. What are you going to do with that excess cash? You're going to invest it to beat inflation. That's what you get. Simple stuff. Very fun. Do I think it's a good system? What's the alternative? I tell people. What do you want to do? You want to have scarce money? You just want to trade gold coins forever? Bitcoin, is that really going to work for buying goods and services when it fluctuates so much? It's not stable enough at this point. So again, the system that we have now has been great for the United States, let's just say, at least relatively speaking to other countries. So unless we have another system that we're talking about in place, I don't know of one, this is what we got. So again, the key, guys, is to master this system, understand the rules of the system, this system that we're in, understand fractional reserve, understand why they print, how they print, and how it affects money, and how it affects velocity of money, how it affects supply of money, how it affects the stock market and asset prices. If you can master that, master the rules, understand the rules, you'll be successful. This is why in March of 2020, we told you that the bottom was in at 2,300 because they were printing more. They were flooding the market with money, and we soared. It seems like kind of a redo of 2020 without the pandemic, except we have a bank pandemic. Either way. So that's where we are this morning. Hope everyone has a great morning. I know I went through a lot, and I'll go over a little more on the live later today, if not tomorrow, depending on what we get in terms of the poll that we'll post. So we'll go from there, guys. If you like these videos and me explaining things, please make sure to comment and say, hey, can you do more videos explaining certain subjects? I would be more than happy to do so. Again, the fact that you guys just want me to talk and you guys want to listen and learn, that's very humbling. So I'll definitely be more than happy to do it. So hope everyone has a great morning. Let's go ahead and kill it this morning. We know the rules. We know the game. Let's go ahead and maximize it. And I will see you guys tomorrow for the morning note. Have a great rest of your trading day on a Tuesday. Cheers.